Encouraging data out of Japan, the country's latest GDP report showed a brisk pickup in growth in the second quarter, helped by resilience in exports despite slowing global demand. The economy expanded at an annualized 6% in the June quarter in preliminary readings of Q2 GDP figures. It massively beat Bloomberg estimates of 2.9% growth. It will also mark the strongest growth since the last quarter of 2020, if confirmed when the final data is released next month. While the upbeat release adds support to the narrative that Japan could exit its ultra-easy monetary policy soon, it's likely to be welcomed by the central bank, which wants a slow but steady phase out of its massive stimulus program. Let's bring in Martin Schulz, Chief Policy Economist with Fujitsu. Good morning to you, Martin. So we are seeing that Japan's Q2 GDP surprises on the upside, largely driven by external demand. So do you see that momentum to continue?
Unfortunately not. Japan had a very strong first half. Real growth actually in the first quarter was 2.7%, which is amazing by Japanese standards. Now, real growth is at 1.5%, which is also a very strong number. But when we dig a little bit deeper, we see basically all the engines that have been driving the economy. Public investment to support the economy, consumer demand to go back into restaurants, traveling, all the services that we couldn't use so much, and then exports because of the weak yen. Almost all of this is weakening except for exports, which are strong because of the extremely weak yen.
Well, you mentioned the weakness in investment as well as private consumption. So what are the challenges faced by the economy and what are those headwinds?
Well, so far we had a very strong comeback, especially the domestic economy was doing very well, while overseas, more or less everybody had significant difficulties in the US, in Europe. Now China is cooling tremendously. The reason in Japan is, well, the domestic economy came out of the pandemic quite stable. Plus, the Bank of Japan could remain expansionary with its policy because inflation was not picking up as fast as in other economies. But now, with even limited inflation, real incomes are under pressure at the lower end. So consumers are not happy and domestic producers are getting pressured by higher costs from imported inflation. So the second half will be significantly more difficult.
Well, judging by the situation you've just mentioned, what's your prediction on the trend of the Japanese yen? And do you see the Bank of Japan to perhaps further tweak its YCC or change its monetary stance?
This is a very difficult situation for the Bank of Japan, but also for investors, because the Bank of Japan is not, well, plotting a clear picture where it is going and where the economy is going, what it will do. Mr. Ueda in the last meeting mentioned that, well, he is providing more flexibility at the longer end of rates. So de facto increasing interest rates in Japan as well, mentioning exchange rates. And this is, well, a very strong and important point because, well, investors are not happy with the very weak yen and consumers are not happy. But to keep in this opaque environment, monetary flows stable, to not to have the interest rates peaking very fast, the Bank of Japan needs to push even more liquidity into the market, buying even more government bonds. So actually, monetary policy is getting more expansionary, and this results in a continuously weak yen.
Well, Martin, if we look at different sectors in the Japanese economy and analyzing the corporate earnings, you've mentioned about the possible situation in the second half of the year. So which sector do you expect to continue to support Japan's economic growth for the second half?
So the first half was basically lifting all ships, and you can see this in the in the stock market and the performance of most companies. Overall earnings are up by 10%, driven mostly, as often in Japan, by the automotive sector, which had a strong comeback. But now with difficulties in the Chinese economy, the US economy not picking up fast enough, exports are strong because of the weak yen. But this is a picture where we have to be a little bit more careful. Only the really successful companies that are able to invest in Asian supply chains and so on into digitalization will do better. Smaller companies in the domestic market, smaller domestic producers are under pressure, and investors have to look into those companies that have a strong balance sheet, are able to invest into digitalization, because wages are going up and costs are going up. So we will see more bankruptcies and more difficulties for smaller companies in Japan for next year.
Well, Martin, we're also expecting China to release its main economic indicators this morning. So as a pretty close trading partners, how do you think China's economic slowdown to affect Japanese economy?
Well, given Japan's experience with its slowdown decades ago, when the economy had to be restructured, when the real estate sector was in trouble, Japanese companies were not too optimistic for the outlook for China. So what Japanese companies are doing is investing into Asian supply chains. They are also investing again into the US economy, although the dollar is so strong. So they are looking overseas, and they need to build their domestic base, because Japan is a stability anchor in Asia, which is clearly a plus for the economy.
Well, many thanks indeed, Martin, for your analysis. Martin Schulz, Chief Policy Economist with Fujitsu.